Welcome back, my awesome people. Today, I am honored to be here with Ken Lako. Now, Ken is the president and CEO of Members Trust Company. Members Trust Company is the first national trust and investment firm owned by and for America's credit unions. Now, they're similar to banks, but as you know, credit unions usually have much better rates. They're more in the communities, helping actual people instead of trying to be those big bankers trying to screw you over sometimes. So let's get right into it. Ken, how are you doing today?
I'm great, Jacob. I appreciate the chance to be here with you today.
I appreciate your presence as well. I know it's a very busy time for many of us. So just being here with me today, talking to my viewers, I think this is an honor that they should share as well. So let's get right into it. So Ken, can you tell us a little bit about yourself, your journey, and how you got involved with Members Trust Company?
I'd be happy to. So I guess my professional career, actually, I used to practice law down in Southern California. Due for family reasons, I was going to move up to Seattle. And so quite frankly, I took a job in a trust department with Wells Fargo with the intentions of being there for a year as I studied for the bar exam and then was going to go practice law in the state of Washington. What I found out, though, is I actually liked the business, Jacob. I liked helping people. It wasn't a zero-sum game, whereas you win, I lose, or vice versa. But we could come alongside our partners. We'd come alongside clients and do some really good things for people. So instead of taking the bar exam, I stuck it out for a bit and learned a lot more about the business. Turns out like I had a bit of a knack for it. So that created additional opportunities for the first 20 years of my career with Wells Fargo. And I had multiple markets, multiple regions, different jobs. I moved 4 or 5 times until I finally ended up on the East Coast, where I was managing, roughly the bottom half of the United States for the investment management and trust group. As things happen, all good things tend to come to an end. So back in, I guess, shortly after COVID, I joined Comerica. I followed my former manager and some former coworkers over to Comerica. Great company, a lot of really good people that we were working with there. And I would probably, quite frankly, still be there today, if not for the fact that I got a call from one of the board members on Members Trust, who I'd known for a couple of years. And they said, "Hey, we got this great job down here in Tampa. We think you'd be good for it. You want to talk to us?" And so as I tell people who work for me, you always need to kick the tires and see what's out there to make sure your current situation is truly the best situation for you. So I took my own advice and had a couple of cups of coffee with them and flew down to Tampa once or twice to meet with a couple of board members. And next thing you know, I'm packing up my stuff and moving on down to Tampa to lead this company that has, to the point you just made, 35 plus year history, and looking forward to the next 35 as well.
And that's the beautiful part of life, right? You might start with one goal in mind and you never know where it takes you. And I believe when it comes to dealing with credit unions and banks, those opportunities, especially 20, 30 years ago where interest rates weren't as crazy, problems weren't as crazy, those were very good opportunities. So now let's talk more about Members Trust Company. Like, how do you define human-centered leadership in a world that is increasingly dominated by AI and automation? As you know, right now, AI is in everything. It's in healthcare, industrials, investments. And a lot of people, executives, are utilizing AI to increase, their gains or their capacity at their company. So what is your thoughts on that?
I'll start by saying I love AI. Okay. It has made my life easier. It's helped me save time. And I don't know how we ever did without it. It's crazy the things that AI can do today. But at the end of the day, AI, or all of technology, to your point, is data driven. It can, gather information for you. It can assimilate information. It can sort it any way you want to. It can keep schedules. But it can't necessarily make decisions, especially if you're an OCC regulated trust company like Members Trust Company is. So people have to be involved. And let me give you a kind of a simple hypothetical. Let's say, Jacob, that you have a company that is 95% driven by AI and technology, right? You still got 5% there, which is human capital or people who are, maybe they're turning on the computer. Maybe it's your sales force. Maybe it's the janitor, but there's real live people behind that company somewhere, right? And so how are we showing up as leaders for them? Are we talking to them? Are we listening to them? Are we hearing what their challenges are and how we can make their job better, how we can make the company more productive? Because if we're not talking to and listening to the people that are on the front line day in and day out, working with your clients, right? We're not learning. And so AI does not have that ability. Again, I love AI, but in my opinion, it's never going to completely replace the human element of all of our businesses, especially in my case in the wealth management and trust business.
I definitely agree. I love AI as well, but we also still need that human touch, that human capacity to still create incredible works. And so, how does AI help MTC? I'm just going to call it MTC for short. How does AI in the past or even currently help MTC? And what does MTC maybe specifically do?
Sure. In terms of AI, you mean? So, well, MTC does, we're a wealth management firm, as you know, investment management and trust firm. We work with both credit unions, their members, as well as traditional RIAs and financial advisors across the nation. Historically, in terms of AI and technology, Members Trust has, like a lot of people, we have a little chat bot on our website that's operational and can answer some basic questions. And then we use it a lot now for note taking in meetings and a few of the things that the humans used to do, right? Or an assistant might have done in the past. With that said, as of last week, we made a decision to make a significant investment in technology, and that's going to include, I can't go into details completely because we're still working on contracts and stuff, but it is without a doubt the largest investment in technology that this company has ever made. What we're hoping it's going to do, or actually what we believe it's going to do, is take us from kind of middle of the pack and quite frankly, in some areas, a little behind the pack in wealth management technology and enable us to leapfrog a lot of our competitors. And so there are many companies, a lot deeper pockets, a lot bigger resources that the Members Trust Company has. But that doesn't mean there aren't some spaces out there that we can carve out a little niche and make a really powerful name for Members Trust and how we're serving our partners and our members. So if you ask me that question about a year from now, Jacob, I'll have a different answer for you, and hopefully be pretty inspiring to some other people.
Well, as you said, every industry is starting to incorporate AI into their day to day, and I'm very happy you guys are as well. And so now looking at the empathy factor, as you know, AI is, especially in healthcare, for example, AI is the one filtering through documents, filtering through claims, denying this person, approving this person. But how much of a role does empathy play in such a data driven, I guess, world economy that we are in now?
So I would say a huge role. Okay, I'm going to get back to my example of real people behind the scenes. And so none of us can move as fast as we want to move. None of us can operate at the level we want to operate without technology. There's no way. It's not possible to scale a business as large and as fast as it can go without the use of technology. But if I heard you correctly, your question was about empathy, right? And that really gets down towards listening to the people that are working for you, and it gets down to authenticity, right? And so, are we as leaders showing up authentic for those people in our office? Are we being candid with them about the challenges we're facing or what needs to improve to make them be more successful? Are we sitting down face to face, like you and I are doing right now, Jacob, and talking through potential contract issues or partnerships, or what is it that you and I need to do to make this company as good as it can be, and to make each individual in that company as successful and as happy and as engaged as they can be. Maybe somebody out there has figured it out, but for me, sitting down with somebody over a cup of coffee or a beer later in the afternoon, you're going to learn a lot more about that person and who they truly are and what they're trying to accomplish and how the two of you can work together than anything AI or data will ever do for us.
Perfectly said. Even though AI might be 95% of a business, there's still that 5 to 10%, if it's 90%, human element, right? Me, myself, sometimes I get irritated when I'm trying to deal with an AI app or something that is non-human, and it's giving me all these options that I'm not requesting. So human element is definitely necessary, especially in money. When you're talking about money, people ask tons of questions. They want clarification. So, I mean, human element is definitely necessary. Now, let's take a pivot here and talk more about MTC. So, Members Trust Company has strong roots in the credit union movement, and these values are very, very traditional. What makes MTC different from other, whether it's a credit union or other types of firms?
Sure. Well, you start early with your introduction, you hit on a couple of things. And so if you Google, why should I work with the credit union? You're going to get a couple of different answers, but they tend to evolve around lower fees for very, very similar, if not identical products and services. It's going to talk about better service. So lower fees, better service creates great value for the members, right? And it's going to talk about reinvestment in the communities. So we're not a credit union. MDC is not a credit union, but we were founded by credit unions. And so that DNA DNA of keeping fees low and being accessible and providing excellent service are very much a part of who we are today. I don't think, in fact, I hope that would never leave the MTC culture, because that's what makes us different. That's what makes the fiduciary business in general different, but specifically Members Trust Company. Jacob, your first question was, how did I end up at Members Trust Company? That's one of the reasons why I'm here today, quite frankly. I've worked at the big banks, and I was in far more leadership meetings at large institutions where we talked about segmentation, we talked about, headcount issues and account loads and stuff like that, than I ever was about how we're going to truly serve our members in a different way. That's different at a Members Trust Company. We truly are people-centric, people-focused, whether that is our employees, our partners, or our clients. And that's the good part of the business. Because at the end of the day, again, whatever business you have, it's all about people, right? Who are you serving? What are you doing for them? How are you changing their lives? And we get that opportunity to do that today at MTC.
And that's how you get to build trust as well. And that's where you'll have generational clients. You'll have a grandfather who maybe got a loan or some type of financial asset from you, passes it down, their child does the same thing. And I think that's a very good way of doing it. And I'm glad that you mentioned the fiduciary. Do you believe the fiduciary standard aligns naturally with credit union values? And how does MTC pretty much embody that?
Sure. Two-part answer. The first part is yes, fiduciary standards from the credit unions do translate over to MTC. So again, at its core, as a fiduciary, you have to always act in your client's best interest. And I think historically, the credit unions absolutely have done that, putting members first, right? They, sometime at their own detriment. I'll give you a quick example. Part of what we do when we work with credit unions is we have a revenue share agreement because it's their members, they're the referral source. We do some of the work, but we do give some revenue back to the credit unions for either for incentive compensation or whatever it might be to make it a fair partnership. I've had credit unions say, well, if I don't want that revenue back, can we just lower members' fees? And so literally you have a corporation saying, I don't want that money. I want to return it to my clients, which is directly in contrast to what you're going to hear at a lot of for-profit, larger banks and institutions like that. Now, I say that because that is who MTC is, right? At our core, we are a fiduciary. That's not to say that big bank fiduciaries or mid-market fiduciaries don't always act in their client's best interest. So don't. I don't want anyone to misinterpret that, because for the most part, we do. It's a great industry, and it's one that I'm proud to be part of. But without a doubt, credit unions and MTC, or credit union culture and MTC, do go hand in hand and fit the space very nicely.
I love that, because fiduciary is very important, especially when you have a third party representing you. It always has to be in your interest and not in, well, of course, a little bit of the business's interest as well, but it can't just be fully about the profits. And I think that's where a lot of banks and hedge funds and investment firms are kind of losing touch with the people. Now let's take another little pivot here and let's start talking about leadership and burnout. Burnout is a real thing. I mean, especially now when things are expensive through the roof. There's not much employment out there for the average person. And they're just frustrated. They're working a job they don't like. The burnout. For those that don't know, in my opinion, burnout is when you're just tired, you're overworked, overwhelmed, overexhausted. So how does burnout, how does that work in MTC? And how do you set boundaries for a work-life balance?
So I'm going to answer that personally, if I could, because you're right. Burnout is incredibly important. We see it right and left. And I woke up this morning thinking about our discussion today, and I've been, so what is it, Tuesday? Starting last Thursday afternoon, I started in Tampa. I've been to Atlanta. I've been to New York City. I'm currently right now sitting in Las Vegas, and I'm headed to Phoenix tomorrow. And so what is that? 6 days, 5 cities or something like that. A whole lot of airplane flights, right? And it might sound
it's like a professional athlete.
Yeah. To somebody who doesn't travel a lot, it might sound glamorous, but it can get exhausting. And so I think burnout is important. And in terms of setting boundaries, I had a good friend a few years back say to me, hey, wherever you are, be there. Or he said, wherever I am, be there. And it's advice that I really took to heart. And so what that means, Jacob, is right now, you and I are talking. Hey, I'm all in. I'm loving this conversation. Again, happy to be on your podcast. I'm not checking my phone while you're talking or seeing who's texting me or anything like that, right? We're all in. Likewise, later on this afternoon, I'll probably end up going down to the gym. I'm not going to take my work phone to the gym with me, or if I have a date on Friday night, I'm not taking my work phone on the date. So personally, I do a pretty good job not setting up walls, but compartmentalizing what I have to do and when I need to do it. And that helps with the burnout. I think your question was directed towards me personally. A few things I like to do to kind of take the edge off. I mentioned going to the gym. So I find working up a good sweat on the Peloton or the treadmill is a good way to blow off steam and help relax. And I play a little bit of golf, and I got two dogs who I love, and good walk on the beach and letting the dogs play in the water it's pretty hard to get upset and worry about an email that somebody didn't respond to or something like that. So I think it's important that we all find whatever it is that works for you and make sure that you carve out the time to do it. Work's important, but I literally could probably work 24/7 for the next 2 weeks straight and still have work to do. So you just got to get comfortable with the fact that there's always going to be more to do, and make sure that you're prioritizing that balance and that self-care.
Exactly. There will always be work to do. Work is not going to be just disappearing all of a sudden. So it's always good to prioritize yourself physically, mentally, emotionally, spiritually, however you can, because at the end, it does make you a better worker if that's the intention to be the best, because you don't want to be overexhausted when you know you have a deadline coming up. And just to stay on that topic, as a leader, what early signs do you see from either yourself or even your executives and your other team members? Oh no, okay, they're going through a burnout. What are some signs of a burnout?
I'm going to answer both sides of that a little bit different. So when I think about myself, or what I would ask my leaders to look at, or a couple of different things, we all know how are we sleeping, right? Are you up at 2 in the morning worried about work, or are you just getting a good night's sleep? That's part of it. Part of it is also how we're showing up. None of us are perfect, and sometimes we'll have a human interaction or discussion, or we'll be in a meeting. And we won't show up how we want to. We're not showing up as the person we want to be, talking the way we want to, treating people the way we want to. And so I think that it's important to kind of have that self-reflection when you feel yourself either acting or thinking you might act in something in some way that's contrary to your core values and who you are. That's probably a sign that, hey, I need to take a look at why am I here? Why are we doing this? What do I need to do to get myself centered again? The second part of your question was about other people, and that's a little bit harder because I don't know how, Joe slept last night, right? Unless Joe tells me he didn't sleep very good last night, I'm stressed about work. I don't know. And so when you talk about how do we recognize in other people, there's a couple of things that I would tend to look for. The first one is if you have a high performing person who always turns in their work on time and it's high quality, who starts procrastinating or missing deadlines or turning in work that's below the standard that you become used to from that person, that's probably a sign that, hey, something might be going on here. Let's have a discussion, right? And then the other thing, much like how we know if we're treating people the way we want to treat them, how that feels, from time to time, you can see people showing up a little bit more maybe short-tempered, maybe just acting in a hurried fashion that they normally aren't in. And again, another sign that maybe something might be off. And the last thing is, Jacob, sometimes you've been there, I'm sure. Sometimes you just know it. You look at somebody, you say, hey, that person's having a really rough day, or that person's having a really rough week. And I think it's okay for us as leaders to test into that. It doesn't mean, prying into someone's personal life beyond what they're comfortable with, but it could just be as simple as, hey, Jacob, I just noticed that you didn't show up in that last meeting how you normally do. Is everything okay? Or, hey, I don't mean this as an insult, Jacob, but I've got to be honest, you're looking a little bit tired lately. Is there anything I could do to help you? And so, again, going back to the leadership principle, you got to have that courage to have those conversations that might seem a little bit outside the box, might seem a little bit uncomfortable or outside of our own comfort zone. But if you're not doing that, then I, question how you're showing up for your team and how you're showing up for yourself.
And I think those are amazing traits for a leader as well. Just kind of doing a mental check or doing just a checkup of their team, especially during a season or a few months of crazy deadlines, crazy hours, because I think most people who are burning out, they may not be able to talk to their loved ones or their friends about it, and they just kind of suffer through it. So I think with leadership comes with checking up on your team. And so of course, when you look at company culture, every company is different, but some companies, they are very fast paced, deadline, people burning out. I have friends in the legal field, they're lawyers, and their company culture is horrible. However, you have other companies where it's a little bit more laid back and less people are burnt out and more resilient. knowing that, has hybrid work or remote work helped with burnouts, or has this caused more burnouts because now people know they can work 24 hours a day without going to the office?
So probably a horrible answer for your podcast, but I'm going to say I don't know, and I'll tell you why.
I love
Every
it. I love
single
it.
every person's different. So I have some people who I have to tell stop work, and they work, 10 plus 12 hours a day, go-getters, great productivity and stuff like that. And I have to literally tell them, no, 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 shut up your computer, go mow the lawn, go play golf, go play with the kids. And so in terms of burnout, there's a risk there. In terms of productivity, and you hit the nail on the head, we're still companies, right? We still have to be productive. We still have to deliver good products and solutions. In terms of productivity there, no problems at all. There are other people who just don't have the self-discipline to work from home. And so it gets, if I have someone working, let's say hybrid in their home and they want to throw a load of laundry in, great, go for it. That's one of the benefits, right? You want to drop your kids off for school or take your dogs for a quick walk. That's okay, right? As long as the work's getting done. Other people, though, just don't have the emotional maturity or the maturity in general to work that remote, work without that constant oversight. So that's why I say I don't know, because it really comes down to the individual person. Then as leaders, we have to know who we're hiring and what they're doing, and making sure it's a good fit for them as well as a good fit for the organization. And, most of the time it works out. Sometimes you find out a little bit too late and then you have to course correct if that's the case.
You're absolutely right. Some people do have the self-discipline to start at 9 a.m., finish by 5 p.m. as if they were in the office. And others, they're probably just still in bed clicking just to have that little green active button so everybody sees that they're still working. Okay, so let's get back a little bit back into MTC. So some of your clients, times are changing, even in investing. For example, 20, 30 years ago, the traditional way of investing was 20% bonds, 30% treasuries, and then the rest into stocks and equities. And that was kind of like the millennial generation, like my group, maybe even the boomers, as they call it. But now we have a new group of investors and a new group of clients, which is the Gen Z. Do you see a difference between how millennials and boomers invested compared to the new generation of Gen Z?
I'd say two major differences. Okay, the first one's technology, right? I think back to 10 years ago, literally had discussions with some leadership groups around, Mr. and Mrs. Jones are coming in, they're ultra high net worth. Are we going to serve them coffee and water from paper cups or a company branded logo cup? Or are we going to break out the fine china? Literally, that's the kind of discussions that were going on with the, oak paneled walls and stuff like that. Jacob, younger generation doesn't want to come, right? They want to hop on the app. They want to check their account balance. They want to, maybe send you a quick email or a text message and get their answers done. So how we serve those clients is definitely evolving. In terms of how you go about investing, you're right. Traditionally, when I first got into the business, we always talked about a 60-40 portfolio, right? 60% equity, 40% fixed income, and it was appropriate for 90% of the population out there. I still am a firm believer in diversifications and balanced portfolios depending upon a client's goals and risk tolerance and their long-term objectives. But I will say the younger generation, right, they grew up with full transparency on the internet. They've grown up with people making millions of dollars overnight, don't always have the same level of patience. And so you're now having to have conversations around things like crypto. You and I weren't talking crypto back in 1990, right? And so something that happens to be getting the headlines. You need a team that is well versed in it and does the appropriate research. Doesn't mean you're going to invest in it, right? Because crypto might not be the right thing for our organization or for our members. But if someone is asking about it and how it fits into our portfolio, we at least need to be able to articulate, who it's right for, where we see it fitting. And then if let's say hypothetically someone wanted to buy Bitcoin, and we don't do that, right? Is there somebody we can refer them to who we trust and make sure that it's an appropriate fit for them and stuff? So it is evolving. I don't know for sure what the future is going to hold. It is my hope that the vast majority of investors out there will stay to tried and true methods, because fads come and go, right? There's a reason why they're called fads. But the one thing we do know for sure, if you look at the stock market and you look at balanced portfolios over any long-term time horizon, it tends to win in the long run. Might not be as fun, might not be as sexy, but it tends to pay dividends, literally and figuratively. So.
And I definitely agree with you, because even on my channel, I have 75,000 subs, and I have a good mix of the traditional investors, the new age investors, the ones that are just all in, on one stock. And so having these conversations with different executives, different investing firms, gives them an idea. It gives the Gen Z an idea of, oh, so this is what they did in the past. And I think the past is always the best way because on my channel, we don't really talk about, you buy at 9 a.m., you sell at 11 a.m. We are a highly long-term dividend investing type of channel where my audience, they love the income that comes in monthly or quarterly. And so when we're looking at companies, I know we talked a little bit about this earlier. We're going to go into ESG. I personally, not a fan of ESG. A lot of companies have been hurt by ESG. And for those that don't know, ESG is the environmental, social, and governance that I believe it was BlackRock that created it and kind of shoved it down every company's throats. But what are your thoughts on ESG and how it's shaping the future of companies, including MTC?
Sure. If you go back to the origin of ESG, it was great, right? And I think if you really focus on that origin, or what I would call today doing the right thing, that's where I think it should have started. That's where I think it should have stayed, right? So in terms of how that affects MTC, one of our core values is integrity, right? Doing the right thing always, regardless of the consequences. And so we're there in that sense. Now, when you talk about ESG, and you just alluded to it, I hope it's okay to say, Jacob, but I hate the current state of ESG for exactly the reason you talked about. It took some really good companies, and if I can say the word bastardize, it bastardized them,
Yep,
right?
go
We've
for it.
got
There's no
uh,
censorship here.
okay, I appreciate that. And to some extent, it ruined some really good companies, all in the sake of politics, all in the sake of culture wars or cultural identity and stuff like that. I would go as far as to say that I don't think a company's voice shouldn't matter, right? A company is not a living, breathing, thinking entity. So if a CEO of a company, myself included, says, here's how I feel about ESG, or here's how I feel about this political issue going on in the marketplace, that's fine. That doesn't mean that MTC thinks that way, right? And so I think the extent that companies can get back to doing what they're supposed to be doing, which is taking care of their employees and taking care of their clients and growing and making a profit, that they should do that. Again, the right thing, not at the expense of people and hurting people and doing great damage to society. But where ESG went is just untenable, and it hurt a lot more people than it helped, in my opinion.
I definitely agree with that. I think, and this is something I tell my audience all the time. If you're an ESG investor, you're going to be losing, you're not going to be able to maximize your gains because of certain rules. But if you do maximize your gains and maybe want to take some of those profits and invest it in something that you care about, things like that, then that's totally fine. But I don't think a company, as you said, it's not a living, breathing entity. I think a company should, of course, look at the shareholders, of course, do the right thing. But I don't think a third party should come in and force you to do something. Because if I owned a company and somebody told me this is how it's supposed to be running, I would not want to listen to them because I'm looking after the people who actually believe in me. And so leaders like yourself, various executives that I've talked to, always talk about their strategies and the way they execute it. What specific systems does MTC use to execute their products or getting their clients?
So love this question, Jacob. Okay, you differentiated strategy and execution, and so strategy is great, right? But you've heard, I think it was Peter Drucker that said, "Culture eats strategy for lunch." I think execution I would put in there as well too. Now, all companies need to have a good strategy for how you're growing, where you're growing, going, what you think you want to be. Excuse me, I'm sorry.
No problem at all. Take your time.
Since we're editing, go back. I diverted. Execution. I'm sorry. Okay, I edit that part. Okay. But when it comes to execution, that's execution is an area, Jacob, where I consider myself a bit of a junkie. Execution is another one of those words that is often overused in business, right? To say, hey, we need to go execute on this initiative. Happens all the time, right? Or people say it all the time. But what I've employed over my career and what I've tried my best to bring to MTC is really a systematic approach to execution. It starts with clarity of expectations. And so are we telling our teams what's expected of them, what the outcome needs to be? Just crystal clear, because if I tell you I need you to do X, and you don't do X, I have to ask myself, did I explain exactly what X is? Do you understand why we're doing this, right? And if I didn't do my job making sure those expectations are clear, I can't expect you to do your job, right? So it starts with execution. I'm going to jump over step number two for a second, but the third part is accountability. I think of accountability as both a carrot and a stick. And so when people do what is expected of them and they do it well, you need to recognize them and you need to reward them and you need to continue to enhance and reward the right behaviors and the right results. And likewise, if people don't do it, either for a lack of effort or they just weren't up to the task or whatever, then that should also show up somewhere, whether it's in just a simple conversation about how it needs to change in the future, or in extreme cases, maybe it shows up on a performance review. In really extreme cases, maybe that's not the right person for your company. But the middle part that I stepped over is where I think a lot of leaders really miss the boat, and that's where we roll up our sleeves, Jacob. So I can't just tell you go do X. If X is a new habit for you or something, I need to train you. I need to encourage you. I need to educate you. During the process, I need to check in with you and see how it's going. If it's going great, I'll encourage you some more. And if maybe you're having a hard time getting started, we'll talk about that. And then perhaps as a leader, I can remove some obstacles, or I can help you create opportunities, or whatever it might be. But I'm not a believer in set it and forget it and come back. I think all leaders need to be actively engaged in their business and doing everything they can do to really help their team members, to really help their employees succeed in all those areas. And so again, three-step process: expectations, rolling up your sleeve and getting the work done, and then accountability at the end has always in my career been a great formula for success. And that's what we're trying to institute at Members Trust Company.
That is exactly a great formula for success, because it pretty much hits on all three. It's kind of like the before, current, and after. And I think when it comes to dealing with investments and wealth management, you want the best of the best. You want the best team members. You want the ones that are actively engaged, and you want the ones that are actively learning as well. Sometimes people might get that MBA degree or that PhD in finance, and then that's it for them. They're not reading any more books. They're not learning anything. And to stay on that, MTC has an MTC University. Can you tell us more about that? What inspired for that creation, and how does MTC prepare the future advisors?
So I wasn't around when MTC University was started, so I can't tell you exactly why they started, but I can tell you what we use it for today. And you hit on it a little bit, was that the advisor piece. And so we work with roughly 100 credit unions right now and advisors throughout there. And then we work with another 100 or so RIAs and independent advisors all across the nation. And so MTC University is really their first place. That's their point of contact, where we do have educational pieces talking about different things going on in the marketplaces. Maybe it's something to do with tax law changes. Maybe it's just something topical about special needs trust. Whatever it is that we believe, or what our advisor partners are asking for, we want to make sure that we're on the forefront and that we're the go-to place for them to get that to get that information. But it's also the place where they can dock into around policies and procedures. And so, Jacob, if you're a financial advisor and you want to open up a new account with MTC University is where you're going to go to fill out the appropriate forms or connect with the right wealth management consultant to get that business started and everything. And we just, I guess at its core, it's a portal for all things advisor centric. So they don't need to, have 10 different phone numbers to call or remember 20 different websites to go to. It's just the core portal for their interactions with Members Trust Company.
I think it's such a cool concept, and I think if more companies had internal training programs or internal being able to lean on someone or a form of professional learning, I think you will be getting a lot highly qualified advisors, because a lot of advisors sometimes might come from a different firm and they have a whole different system. But having an internal training and internal professional learning, I think that is actually very, very beneficial. Now let's look at industries at a global scale. Just from your own professional and personal experience, what industries or sectors are you seeing the most interest from investors currently?
So might be different tomorrow, and it was probably different yesterday, but I'll kind of give you some broad answers. We've already touched on a little bit of it. AI and technology, incredibly important. I mean, every company, every every business, every industry is trying to do more and more with AI, with technology, and with the infrastructure that surrounds it. So if you are a serious investor, you can't get away from looking at the AI tech space in some way, shape, or form. Within that, we're recently seeing a whole lot of attention towards, let's call it health tech, basically. I don't know if you can see, I've got a little Aura ring right here myself, right? That tells you my blood pressure, my stress level, and how I slept last night. And other people wear their Apple Watch or their
Yeah, a lot of
Whoop
people are
Whoop,
starting
whatever
having
you
those
call it.
health wearables.
Exactly. And so that's just the beginning of it. Where that can go is anybody's guess, right? And in terms of disease diagnosis or early warning signs and stuff like that. So I think it's incredibly important to where we're going. And I think a lot of people are seeing that and recognize it and trying to figure out how they're going to invest in that space. Over the past year, I think a lot of people are interested in the financials too. You look at all the major banks that had a pretty nice year, last 12 months. Part of that is something you alluded to is interest rates and, what are the interest rates doing? And so if the Fed chairman comes out and speaks about lowering or raising interest rates, we're having a lot of discussions about what that means for the market and specific companies in general. So we're seeing that. As you're going up market a little bit more, kind of towards the ultra high net worth space, you're getting a lot of talk. They invest in things that I don't invest in. Okay, but so you're going to hear a lot of talk up there around venture capital, private equity, and definitely more real estate and hard assets. And so a lot of it does go depending upon where a client is with their investment lifestyle life cycle. But those are the areas that we're seeing a lot of interest in right now. We already talked about crypto a little bit, Jacob. Again, that seems to get all the news right now. Every day I open up my app and I see something about Bitcoin doing this or Bitcoin doing that and what it means. It's not something we go too deep with at Members Trust Company. It's not something I've put a lot of personal time and attention to either, so I'm not qualified to answer it. But to answer your question, are people talking about it? Absolutely, we're hearing rumblings there.
And you know what? That actually leads me to my next point, which is about crypto. I was just going to mention, 10, 15 years ago, institutions did not want to touch it. It was too skeptical. They didn't know where it was going to go. But then you had the retail investors that were like, yeah, we're just going to shoot our shot. What are your personal thoughts about crypto? Just a couple years ago, we got the spot Bitcoin ETF. Crypto's volatility is definitely not a consistent one. So personally, I don't think it's a stable form of, currency, as some people kind of allude to. Just, even if you're not a believer of crypto, what are your personal thoughts on them?
My first personal thought is kicking myself. I remember I could have bought Bitcoin at 100. I remember when it was 1,000 thinking, well, I should throw a little bit of money into this, but I didn't, right? And look where it is today. So you talk about fear of missing out. I missed out and I kind of kick myself for that every now and then, right? But again, I'm probably not the most qualified person to talk about it. I understand it tangentially. I understand it at a surface level. I just haven't really gone deep enough into it to tell you this is a great asset class. My instincts tell me it's probably not. Think about people like Warren Buffett. He's not out buying $10 billion in whatever the latest meme coin is, right? He's sticking to tried and true methods. And that's kind of my personality. That's kind of what I think is the safest way to go. But I say that knowing full well, Jacob, that a lot of people have made a lot of money with concentrated positions, whether it's that individual stock or betting big on some sort of a coin that might be out there. So wealth can be generated there. But I would just use a word of caution, be very, very careful, know what you're investing in. And again, just be careful. That's the best way I could put it. I know that's not an overwhelming endorsement for crypto. And again, that's just, I'm a little bit old school in that sense, I guess.
No, you know what? I guess we both have the same thoughts because I personally, I dibble and dabble, but I am not a crypto geek or a crypto nerd. Far from it. The only cryptos I really know are Bitcoin and Ethereum. All the others with the dog on it, with the polka dots and all of that. I'm just like, hey, you know what? The new Gen Zs can tackle that because my viewers, myself, we love our dividends. We're safe investors. We don't really like to be too risky, especially if our time horizon isn't 40, 50 years. We might have a 10, 15, 20-year horizon. So it's kind of better to be a little bit more safe. As a CEO, what personal values drive your decision making?
Good question. I appreciate that. So I'm going to start with, I mentioned earlier that I think I mentioned that in a different life, I probably would have been a teacher, quite frankly. I love helping people. And, I think, Jacob, back over last 20-ish years of my career, I couldn't tell you for the life of me what my sales goal was back in, let's say, 2021 or 2022. But I could tell you almost word for word discussions that I had with team members or people that worked directly for me, where something I worked with them on or something I was coaching them on or training them on truly impacted their life. I mean, it impacted their ratings. It impacted the bonus they had. There's a case where how I was working with someone helped them be more successful, which helped them generate more income, and they were able to send their daughter to a college that they otherwise would not have been able to send. And I could probably give you 10 or 20 different examples like that. That when I think forward 10 years, and I'm sitting in a rocking chair someplace in retirement, I'm going to remember those conversations. I'm going to remember how I impacted people and how it changed their life far more than I'm going to remember how I did with in terms of hitting a sales goal. So a sales goal, a revenue goal, building a company, incredibly important. But the value around putting people first and truly caring about those people is something that you can't get away from. And so that does to a big part drive the decision making that I have at Members Trust Company. Now, with that said, I did say people first, but we do have to build a company. I tend to be pretty competitive. I tend to be pretty growth oriented. And so those are always at the forefront of decisions we're making. You have to balance the people. You have to balance short-term decisions, but also taking that long-term horizon. And what are we going to do today that's really going to set us up for success in the future? I mentioned earlier, we're about to embark on a significant investment in technology, right? That's not necessarily people centric, other than the extent that it will impact their jobs, hopefully in a positive way. That's more growth oriented, but just finding the way to balance those two. Before I got the job as CEO, I didn't understand exactly all the burdens that might come with that seat, with the seat, let's say. But there is every day, right? There are decisions we make that impact people's lives, and you just have to make sure that you're truly balancing that. It can't all be always what's best for people. You have to just balance it with the decision. And, I'll give you an example. I wish I could give everybody a 10 or 15% raise every year, right? I would love to do that. But we can't do that, because if I do that, then I don't have the money to invest in technology. I don't have the funds available for an appropriate marketing or brand awareness campaign. So just always finding that balance, that balance between the two or three or four or five things that are most important to you is where I think the best decisions are made, Jacob.
I think that's going to be the key word of the year, balance. With so much going on, you have to juggle everything at the same time. It's about modernizing your company, modernizing yourself, but at the same time, staying true, staying human, and having empathy with what you do. And so I have a two-part question here for you now. What was the best advice that you've received in your professional or personal journey? And what advice would you give entrepreneurs who are building companies in this new modern day age that we're in?
Best advice. I've been the fortunate recipient of a lot of good advice. I mentioned something to you earlier about, wherever you are, be there, be present. I had one time, going back to the balance discussion, where I was overwhelmed in my career. It was probably 15 years ago or so. And so I was talking to somebody, and this is a very successful businessman. And his advice to me was, hey, you can only do what you can do. Do it to the best of your ability, but you can only do what you can do. And so we talked about balance and compartmentalization earlier. That's part of it too, right? I've got X number of hours in the day, and I can only do what I can do, and I can only expect other people to do what they can do. So that helped. I think, though, probably the best piece of advice, and I'm going to simplify it, is to be yourself or be authentic. I remember, early in my career, I tried to show up how I thought my bosses wanted me to show up, or how their bosses expected me to show up. And it wasn't natural. It wasn't me. And, once I became incredibly comfortable with who I am and what I believe in and where I want to go and stuff like that, how I was showing up, whether it's for, let's say, a job interview, like the one here at Members Trust Company a few years back, or in presentations to clients or partners, it just really took on a life of its own. So be yourself and be authentic, and just know that's good enough for the vast majority of the people. And if it's not, then again, you can't make everybody happy, right? It just doesn't happen. So,
Exactly.
oh,
And sorry.
Oh, I was just going to say, I think the second part of your question was advice to founders. And again, I think we mentioned earlier that I'm not the founder of MTC. The company has a long storied history, long before I was going there, but I have had some small businesses throughout the years. If I was going to give any founder or any entrepreneur advice, it would probably come down to two things. The one is why, why are you doing what you are doing? What do you want to do? And so by that, I mean, did you start your own business because you want the freedom, you want the control? What is it that you're trying to accomplish and why you started it? Or maybe you started the business because you want to make as much money and grow as fast as you can. Well, those are two different courses of action and what you're going to do, right? So start with your why, know why it is what you're doing, and make sure that what you're doing in and day out aligns with that. The second part of that is I would say be open to change, because what you're thinking today and what you might be doing today might not be the appropriate thing a month from now or a year from now. So be open to reassessing your values, be open to assessing where you are with your journey. And if different methods or different people around you are what's needed, then have the courage to make those changes.
Thank you for that advice. I think you're absolutely correct. And I think we saw a lot of that during COVID, where the brick and mortar stores, they were not able to adapt to the new digital world. So they were still hoping to expect people to start walking in when, the new world was everybody does online shopping. And unfortunately, a lot of those brick and mortar stores had to, close up and do something else. Ken, we do have a small segment on this channel where we do ask out of the box thinking questions. Are you up for it?
Yeah, let's go for it.
Okay, perfect. So, if Members Trust Company was a person, what kind of personality would it have?
Well, good question. It would be driven. So one of our core values is innovation, right? And so you're some creative people out there that and stuff. We have a long history of innovation and creativity, and I think that's probably the hallmark of who we are and where we come from. Again, well, I'm instilling a little bit more discipline than they had 20-ish years ago and stuff, but the whole innovation, creativity is a big part of who we are. I don't ever want us to lose that personality. So.
I love that. Second question. What was the most random app that you've downloaded in the past or you currently have downloaded? Some people say they have a sunset app. Some have a meditation app. What would be the most random app that you have?
The most random one is called Pep. So as in for pep talk, if you ever heard it, it's quick
Ooh.
little snippets. People like the guy who wrote Extreme Ownership and stuff. So there's motivational things there. Michael Jordan, Tiger Woods, and all the Kevin Hart's on there and stuff like that. So sometimes if I'm out walking my dog or at the gym and stuff like that, it kind of gives you that extra little step to keep going and power through the challenges or again getting back to the balance. Right, if you're a little bit burnt out, it's a good motivational app in my opinion.
You know what? I'm definitely going to check that out. I love motivational pep talk style apps and speeches. So I'm definitely going to check that out. Thank you for that. And the final question. So I know you did say you would have been a teacher if you were not in this world, but if you were not a teacher, what other world would you have kind of put yourself into when it comes to career wise?
If you set a goal, I'd love to be a golfer or a baseball player. Those are I played a lot of sports growing up. Obviously, I did not have the skill set to do that, or you would have heard my name a long time ago, probably in that work environment. So you excluded teachers from that equation. I'd probably be an architect. I think when I go to cities like Chicago, or you see pictures of Dubai, I think it's absolutely inspiring to see what people create from the ground floor, and I think there would be an incredible self-satisfaction and pride in building just a glorious, beautiful building that people admire for, I started to say years, but perhaps tens or hundreds of years to come. So.
I definitely agree. It's kind of like creating a masterpiece for the world to see, but at a grand scale. Yeah, I'm jealous of architects too. They create some beautiful pieces. So Ken, you have given us some amazing advice and wisdom in this interview, and I really appreciate it. So just to end off this interview, where do you see MTC in the next 3 to 5 years?
I'd say two primary focus areas. We mentioned credit unions, and we're working with 100 credit unions right now. If you there's surveys out there that say 50% of credit union members want to do wealth management with their credit union. In truth, only about 2% of them do. And so helping the current 100 partners that we work with close that 48% gap is a big part of what we're going to be doing in the future. But I mentioned we're working, actively with 100 credit unions. There's 5,000 out there. So we need to get 200 or 300 or 400 that we're actively working with. It's part of our history, part of our legacy, and will always be part of who we are. At the same time, we're aggressively moving into the independent RIA space. And so we've been blessed to have some really nice partnerships develop over the last few years. I will share with you our pipeline in the non-credit union space, so specifically around directed and delegated trustee opportunities, is immense. That's our current pipeline is probably 25 to 30% of our current assets under management. So we're just seeing great opportunities out there. And at least for the short term, you mentioned 3 to 5 years, I think there's enough business out in that space for us to really carve out a nice niche for ourselves and really win. So those are the two areas that I see the greatest growth opportunity for Members Trust Company.
That is perfect. And especially now that you've also invested heavily into technology, into AI, I think, it's just going to continue expanding and continue growing. And you're going to get a lot more clients and credit unions that join the team. So I'm actually looking forward to your journey. And viewers, remember, I will have all of MTC's information in the description box. So please check them out, especially if you're not a fan of the big banks. Check out MTC, check out MTC University, see what they're all about, because I looked at their site and I love it. It's different and very informative as well. Ken, thank you so much for being here with me today. As I said, I know it's a very busy time, especially with the next quarter coming up. And we are going to have you back on this channel very soon so we can continue seeing the journey, seeing the expansion, and hearing more of your wisdom and your expertise. So we really do appreciate that.
Jacob, I'd love to be back. I appreciate your time today. It's been a pleasure talking to you.
Definitely. Thank you so much. And audience, please make sure you like and you subscribe. I always bring you the best guests, the most informative guests to help you in your investing journey, your knowledge about investing, or even just business in general. So until the next time, stay ranting.